names are
We're going to get started. As soon as I get people to sit down, you guys will take a seat. I'm the father of twins, so I'm going to get me. Yeah, let's not get Right, well, good afternoon. You're all suffering, I'm sure, from a little bit of fatigue, but I assure you that this will be worth listening to. We have, I think, the best of breed here. Folks who are incredibly well attuned to the market and are active, very, very active, many of whom are pioneers in the field. So this is one for me that I'm very excited to moderate. Joseph was going to moderate this panel. I have to leave tomorrow, so he's going to handle the micro review tomorrow. So let me just introduce quickly who we have here. I'm going to go in alphabetical order, no implications in terms of where people stand on the pyramid of power. The first is Doug Atkin, and Doug.
It was.
Yeah, oh yeah, you are number one. Doug's been an investor, founder, and senior executive in financial technology for 20 years, and he has some wonderful success, including he was with Instinet, and he was the CEO there. He had an IPO in 2001, and hopefully got a lot of money because it's a very nice watch. And then he was the co-founder of Efficient Frontiers, which was a consulting and research firm specializing in trading technology, regulation, and market structure, studied a lot of different models. And most recently, he was the CEO of Majestic Research, where he grew them from $9 million in revenue in 2005 to $20 million in 2007, and had it, the company was acquired by ITG, which is on the New York Stock Exchange for $56 million, so he bought himself another watch. He was selected as one of the top New Yorkers by New York Magazine, and because of his leading role in redefining the financial marketplace, we welcome you here today. And now he's with Guggenheim, which is a Goodwin Procter longstanding client, and Scott Minerd, who's the Chief Investment Officer, is one of the biggest people I've ever met in my life. He's about 300 pounds body, a weightlifter. And so when you go in and get a deal approved, you worry about getting your ass kicked too, right?
Yes.
Yeah, okay. Yeah. So, Adapia Diorigo, who is with Patch of Land, she's the Chief Marketing Officer. She has been leading and working very hard over the last several months. Since they've been open, they've been around for about, 8-9 months now, and she targets the offline marketing, the online marketing, deals with media relations, and is basically getting everyone and anyone who is interested in high-yield lending onto the platform to take a look at it. She spent several years in banking and investor relations with a Swiss hedge fund, and she went to Canada for school of BBA from the University of British Columbia, which is, quite frankly, where the band Heart is from. Ann and Nancy Wilson are from there, and I think that's great. Can you shred? We'll find out if you shred. Brandon Jenkins. Brandon is with Fundrise. He's the co-founder. He serves as the head of the product development department for them. He works with design and technical teams to set strategic direction, and it's also importantly the director of Westmill, which is the Washington D.C. based investment development firm that takes money from Fundrise and does a lot of the projects. He has a lot of deep experience. He was with Marcus and Millchap, and he was also with Westfield, which is a tough company to work for. If you earn your chops there, in the Lowies, you know your stuff. We have Scott Picken, who everyone just heard from. He's got the best accent of anybody, and he is just passionate about global property investment. There's no doubt about it. He gets all excited, and everybody tries to guess where he's from, and then when they find out South Africa, we all wish he was from Australia, because you know, we think about Australia a little more, but South Africa is a nice place, lovely. And you're a highly educated guy. You're driven. You're visionary. I think that's kind of it right there. Kevin Swill. Kevin is the belle of the ball these days. Kevin's been, he's with the Carlisle Group. I'm sorry, Kevin is with Carlton and has put together a tremendous platform that everybody is copying right now. He's recapitalized a ton of apartments, 13,000 units, a lot of experience in real estate, and he played a key role in the acquisition of 666 Fifth Avenue in New York, which was sold for about $2.2 billion. So he has a nice watch too. Rishi Thakar, the Rish, or the Thakar, is Vice President of Investments at Realty Mobile. He was with Rockwood, he was with CIM, he's got a lot of great experience, and has joined Realty Mobile and is basically out there, like Brandon and others, working with people, getting them on the Realty Mobile site, and is doing just kicking ass right now, so it's fun. Okay, so based on that, did I miss anybody? Everybody there? Who did I miss? I got Stefan. All right. Groundbreakers. This gentleman's a lawyer who was with White & Case. He is one of the top creators of platforms, the back end of it, and he and his partners are out doing white label for a number of major folks. So we welcome you here as well. So there are a couple of marketplaces we talked about today. Portals are a little different. The multi-operator marketplaces like Realty Mobile, Fundrise, and Wealth Migrate. I'd like to just turn to you, and Rishi, I'm going to start with you and just ask you to talk about your business model. Why are you the better platform for people to be on? What makes Realty Mobile the voodoo that we want to do?
Thanks for the introduction. Appreciate everyone taking the time. Realty Mobile is an online platform to raise capital for real estate. We raise capital in both debt positions and equity positions. We structure both majority and minority positions in the equity, and in turn raise capital from the crowd to backfill those positions. Why should folks choose Realty Mobile? You know, we have a deep bench of people with institutional real estate investment backgrounds. We have relationships with sponsors directly. Many of us have worked with with an institution previously, so we understand what all the contracts look like. We understand what all the rights that you need going into an investor as a minority investor requires. And we structure things such that we can provide the average accredited investor with access to a deal similar to a fund would have, so you're essentially pro rata with some of the major limited partner investors out there.
How about you, Brandon? Talk about why Fundrise got $31 million versus everybody else. What makes you so hot?
Well, we've been doing it for a long time. We started almost 4 years ago now, and have pretty much raised capital for real estate every way under the sun. So we've done Reg A's, we've raised money from uncredited investors as small as $100, and we work with institutional sponsors as large as Silverstein, owner of the World Trade Center. So I think some of the things that make us different, we're very sponsor-centric platform. We're big believers in the quality of the people who are doing the deal, have a lot to do with the quality of the investment. So we first and foremost are always looking to work with top quality real estate sponsors. I think another big difference for us is that we really are focused on opening up access to these investment opportunities to the broader public, meaning not just accredited investors, but everybody else.
But aren't the, I'll just challenge you on that, aren't the smaller investors the biggest pain in the ass though? Isn't that the biggest risk?
I'd say we haven't found that the smaller investor, meaning the unaccredited, is necessarily that much more difficult than someone who is accredited. I've found that the difference in an investor tends to be more an individual who's a retail investor or a professional or institutional investor, rather than the unaccredited black and white line that's created by regulations today. So we haven't found that the retail investor specifically is actually any more difficult than another individual retail investor.
So let me just drill in a little bit here. Do you pre-vet your investments, Realty Mogul and Fundrise, and do you actually tell people that you are pre-vetting them and that these are deals they should go into? Are you giving investment advice? How do you walk that line so that you're able to be a neutral platform, so to speak, but you're also able to make sure that you curate with the best deals?
So, in terms of your questions, do we pre-vet the investments? Yes, we have a very high bar for people that we work with. We want to make sure that people that we work with have a minimum net worth liquidity. Our platform, much to everybody's chagrin, is not a platform to give real estate a try. That's not what we're advocating. We are a platform to pair accredited investors with experienced sponsors for real estate transactions. Do we offer investment advice? So we are not an investment advisor per the law, but we are affiliated with a broker-dealer, and we have many internal credit algorithms and suitability algorithms to ensure that someone's accreditation matches the investment that they're looking to make. So that's how we get around that.
Adapia, you're a marketplace also, but you're on the debt side. And same questions. Who are your investors? You guys have done about 13 deals or 15 deals. And
17 now.
17.
Yeah.
It's growing every day.
Yeah.
I know, and bigger and bigger. What's the what makes your higher yield lending, rapid lending attractive, and what are the hazards that you see?
Sure. So Passion Land's a marketplace for short-term loans. We issue loans up to 12 months, and they're all secured with a first lien position and personal guarantees by the asset. So we're talking about loans generally for fix and flip, rehab, in bridge financing in residential and small balance commercial loans. We are one of those platforms that funds first. So we pre-fund the loan, and then we let investors come in and take fractional ownership in the notes. We only work with experienced operators who know their local market really well. We don't work with first-timers that just decide that they want to buy a home and flip it. So they have to know what they're doing. Like everyone, like all of us, we all have really stringent underwriting. We're not here to try and make a quick buck and just turn it around. We are, because of the way we operate and we don't have a prepayment penalty, we're finding that a lot of our loans are being paid back within 6 to 8 months. So for an investor, we're a nice option for your non-performing cash, if you will. And we curate, we source, we underwrite all our own deals, human underwriting with a lot of data, credit analysis, credit models as well, rather. And our operators also, we always ask them to put some skin in the game. So they're always having their cash in as well. So we try to mitigate the risk as much as possible on our loans. So we have this niche. We don't do equity, and again, it's just it's an alternative to financing, and it's an alternative investment on the short-term scale.
Your investors primarily domestic, foreign, both?
Both, actually. Yeah, we've been doing a little more foreign deals. That's a little more paperwork on the back end. But of course, American accredited investors can invest online. It takes about 5 minutes. Everything's e-sign, DocuSign. You can do it on your phone.
Speaking of international, Scott, talking about your platform, we've seen books written by your partner. We've seen a lot of experience. We've heard a wonderful accent. Why should people go with Wealth Migrate as opposed to going directly or going with one of the other platforms? Besides the international notion, I know that's big.
Look, I think the most important point, and we spoke about this in the earlier session, and I want to repeat it, is that when it's real estate, it's got less to do with technology. Technology is an enabler, but not a definer of success. And so, to answer your question, you need to look at the real estate opportunity, and you need to be able to look at the real estate partners. Now, we've spoken a lot, and everyone speaks about how they choose their sponsors, they choose their partners, and ultimately, I like what you say in terms of skin in the game. That's a success strategy we've had for over 10 years in terms of making sure that we speak a lot about the pig and the chicken. And if I could ask anyone in this room, who is committed and who is involved at breakfast between the pig and the chicken?
A rabbi, because no one will eat the pig.
Anyone?
No, I don't know. I don't know.
Think about it. One is committed and one is involved. Which one is it?
The pig. The pig, because he's got skin in the game.
The pig's committed. When you have breakfast, the pig's committed. The chicken's just involved. And our perspective is that when we do investment deals, real estate deals, we only deal with pigs. And so to answer your question, why you would work and partner with Wealth Migrate is that we don't actually necessarily compete.
No, you only take pigs. That's not a great way to go. I just want to tell you, because if I'm investing with you and I'm a pig, I don't feel good about myself.
Well, depends which angle you take, to be fair. At the end of the day, there's a big difference between a paper yield and a bank yield. A paper yield is where we talk about making a return, and a bank yield is where there's actually money in your bank. And whether you're a pig or a chicken, you don't care, you just want a bank yield. So my point being is that from our experience, the most important thing is that we like to partner with people in the first world, and we like to create in the emerging world. And so a lot of people sitting at this table, I would like to do business with in the future. Because in 3 weeks' time, we're going to be in Singapore in front of 1,000 investors that are very consciously looking at America. Last year, $38 billion moved from the East to America. It was the #1 foreign direct investment anywhere.